Hey, everybody, welcome to Options with Hans. I'm Hans Albrecht. I was a pro options market maker for 15 years and an income fund manager for a decade after that. $750 million in cash flow generated in those funds and $1 billion in option strategies managed, including downside protect funds. So remember, offense and defense, of course, have to go hand in hand in this game. So please like and subscribe. Grab that free options cash flow blueprint book that starts from the very beginning for those who really want to know my favorite ways to generate income and get to know options. And today, if you grab those ebooks, I'm going to get you on the list to let you know about my incredible 4th of July deal that I'm announcing later today. It has to do with my hugely popular LEAPS Trader program, LEAPS Trader AI, LEAPS Explosion, but you get a ton more with it. So it's all down in the description. But as always, this is for educational purposes only. Your trade, your responsibility. And if you're okay with that, let's dig right into this week's Millionaire Monday episode. We're entering the next leg of a bull market. I hope you guys aren't tired of hearing that, but this is going to be driven by AI inference. It's different. It's not the training as much, although that's going to still keep going strong. It's the inference portion that requires 20, 25 times more compute, a lot more power, and it's going to push throughout economies, throughout industries, throughout companies, and throughout our individual personal lives. It's going to be absolutely massive. This is going to be at least as big as the internet was in the mid 90s. And it's going to happen fast. So you want to really make sure you're in both the right names and not in the wrong names. So we're seeing amazing disruption out there. I bought more puts on Google this past week. I'm sour on Google. Anybody who's been watching my stuff knows that. Fantastic other kinds of business that they have, other Waymo and YouTube, greatest asset in the world, of course. But I think search is in very, very big trouble. So interesting one to watch there. And look at what happened to Visa this week. We heard about it about 10 days ago. And then again, Visa dropped about 5%. I think it was on Wednesday. The US Senate passed new stablecoin legislation. So what that means is investors are now concerned about stablecoin based payments potentially letting merchants sidestep traditional credit card networks, right? This is going to be a very long-term threat to Visa's core business model as this unfolds. Visa, an incredible company, one of my favorite companies, incredible cash flow, incredible balance sheet, incredible moat. But guess what? Visa charges merchants a ton of money. So another massive, massive moat, if you look alongside Google's, that is being threatened. This world is changing, folks. So hit that bell down below. Don't miss my updates. I really hone in on this stuff. So Reddit, let's talk about it. Clean, high quality data isn't just a nice to have. That's going to be our tagline today, really. Reddit is a living, breathing data set. So in this world of everything, think about it, everything's potentially going to become more and more AI. Is anything going to be real anymore, right? We've got AI art, we've got AI shows, we've got AI music. AI is making music. People who make music are terrified. AI girlfriends, yes, look it up. People are hooked on AI girlfriends and relationships. The real world may actually become a kind of rarity in a weird sense. And Reddit is one of those companies that's going to really, really push back against that, right? Google search is becoming very real. So that money, that revenue, that ad spend is going to be going elsewhere to where real eyeballs and decision makers are where the spenders are. So you think of things that have strength. Some of my favorite stocks out there that are in my portfolios for any members: Netflix, things like Amazon, other areas like TikTok, Reel, Shorts. They are going to be absorbing those real-time eyeballs. Sports are going to be huge, right? This is going to be a place where you can advertise and know that people are watching. So think about that theme as people start to really spend more time in areas digitally online, and where those advertisers are going to start to find those eyeballs. Google is a great example of what's going on, right? It's not collapsing, but those dollars are migrating towards platforms that are going to pair community trust, community intent, and almost, think about it as robust first party data that advertisers really, really covet. So the winners are going to be these channels that can provide this sort of cleaner line between conversation, community, actual real people input, which is something that sort of a plain vanilla kind of search engine, search result is really going to have trouble with. So this is really a changing world from an advertiser standpoint and for companies like Google. So next important point. I don't know if you've noticed, but there are a lot of lawsuits flying around now. And this is still a little bit of the Wild West, but you can see for about the last 10 months or so, you can see that AI is now starting to pay for content. It used to just go around and scrape everything it wanted. Behind paywalls didn't matter. Those AI models that have been doing that without asking are finally hitting a lot of legal roadblocks, right? So, and I think this is really a game changer. This plays into Reddit as well. So big names like the New York Times, BBC suing the AI giants out there, those hyperscalers who feel like they can just grab anything they want behind paywalls, are now getting hit for grabbing copyrighted content without permission, right? Getty Images raised a fuss. Now they're doing a deal with a number of AI companies. You can see here, OpenAI, News Corp, a whole bunch of deals now being made, right? This is real data. This is in keeping with what I'm talking about with Reddit, is that real data is going to be coveted. Otherwise, AI just becomes this kind of big circular kind of regurgitated system. It needs reality. It needs real-time reality, which, by the way, is a great thing that Reddit provides, right? That's what makes it even more coveted. So these lawsuits are really pushing AI companies to cut deals. They're going to pay up instead of hiding behind these sort of fair use sorts of things. So some hope for writers, publishers, photographers, right? We see there's another one here. We've got Shutterstock, Getty Images, right? They're all plunging in. They have all this incredible data, these billions of photos, all these things that they've had. They realize they're sitting on a gold mine. And now these companies like OpenAI, who literally have any budget. I mean, you heard about them wanting to pay new hires with talent $100 million signing bonuses. These guys don't care. They have all the money in the world, and all they're focused on right now is grabbing market share. Enter companies like Reddit that are able to say, "Oh, sign on the dotted line here. I want 10 times what I charged you last time." When you are a purveyor, a holder, a middle person, a middleman type company with incredible content, you're going to be this is making marketers' ears perk up big time, and the whole world is going to notice this. It's very, very important to anyone kind of betting on this sort of data-hungry AI boom that I'm talking about today. They rolled out Reddit Insights, conversation summary add-ons to what they're doing. So what is Reddit doing? Well, they're going into their own data, 20 years of billions and billions of posts, 22 billion posts and comments and things like that they have, and they are now reducing it down into insight, right? Remember what I talked about? This is the inference phase of AI. This is where we start putting insight to use for companies and people to figure out how to make money with it. And these guys are so on the ball. They've come out with these two AI-based initiatives that are going to take all this information and create a kind of almost real-time sort of street smart system for advertisers. It's going to slice that sort of fire hose of memes and hot takes and deep dives and all this crazy stuff that you've got in a place like Reddit into sort of these clean dashboards. Almost think of it as kind of almost like a snow, right? I'm going to talk about snow in another video. Snow comes in and they take all this data that you've got across all areas and siloed parts of your business, and no one's speaking to anybody in quite the right way, and it takes it and it brings it all together, right? So these summary add-ons, right? They kind of imagine like a Nike ad. Right underneath it, you kind of have this hand-picked sort of glowing Reddit comment about those sneakers. Everybody's talking about them. All this social proof is there, right? Real people loving this product. No Photoshop testimonials, no garbage, just real users talking about this stuff. That is catnip for click-through rates. That is creating click-through rates, which you are not getting on Google anymore. Guess what's disappearing? Click-through rates. No, people aren't going to Google as much. They're not doing click-through rates, and they're getting this sort of AI version of what Google's kind of put out there, which is less click-through rates. It's got some appeal to it from a revenue standpoint, perhaps, but it's changing, right? So this is really the takeaway. Models are starving for that authentic information. These people who spend money are looking around, and Reddit is distilling everything they know down into not just information. People aren't just going to look for a word. They are looking for context. They are looking for sentiment. And that's actually a big differentiator versus even like a Facebook or a TikTok. That's very kind of behavioral data. And that's why I'm saying the world is going to take notice of this. And some initial studies are showing a 19% click-through rate increase already. And so this is really, really big stuff. It's actually quite exciting for Reddit. And I think as an investor, potential investor, very, very exciting as well. And I think we're going to get to the metrics in a moment. And I think what makes it interesting is that it could potentially sort of shift the way that the valuation of Reddit is really treated, right? So Reddit is really kind of a social media company right now. You get a lower multiple in the market for that. But what we're talking about here is two different kinds of businesses. The ability for Reddit to go and say and grab all these big contracts of recurring contractual revenue. That's very different from a sort of more cyclical or an ebb and flow in advertising, right? Going out and saying, listen, you're going to pay me $200 million now for access to my data. That is nice, beautiful, ARR, as we call it, annual recurring revenue, and that is a beautiful thing for investors. That has been, if you've noticed over the last 15 years, anybody increasing their ARR is just getting a huge multiple put on them, right? So there's that part of the business that is in serious growth mode from my perspective, and then there's the advertising part of it, where these AI tools are just going to custom tailor everything to what marketers want to see. So that's the potential for Reddit to almost convert its AI fuel into sort of this locked-in subscription-style business to some extent, right? They're still going to have that ad business and all this other stuff that they're coming up with. They're moving into other parts of the world. Their active daily users in Brazil are up 80% because they have this translation mechanism that's going to start working around the world. It's incredible. The potential international growth is incredible. But this subscription style business could really shift the company from almost this sort of ad technology style sales company to a data platform that is now doing many, many different kinds of things and could be categorized very, very differently. So that's pretty cool. And remember, the advertising part of it that is less that has less visibility, that is really, really high margin. Look at their margins. We'll look at those in a second there. So it's this really ability of using sentiment and these new tools that they have to really kind of push advertising in a way that doesn't really just rely on traffic. It's kind of the quality of what you're giving people, right? And so that is high dollar margin stuff in data licensing, software as a service type businesses. Really, really great. Let's take a look at some of the metrics. Big news, of course, Reddit posting that first real net income gain in years. So this is a real inflection point for this company, right? We talked about those gross margins, those extra dollars that come in, very, very juicy, hitting the bottom line. So revenue growth really starting to outpace those expenses, which is really good. You're seeing this maturing kind of business model, even though there's just so much amazing growth left, which is kind of exciting. Not just chasing those clicks, they're turning engagement into real dollars through the licensing that I'm talking about, through the ads, which is a bulk of their revenue, right? So they're not just growing that top line, they're really, really pushing it down to the bottom. A lot of real nice cash being thrown off. 90% profit margins, gross margins rather, operating profits going in the right direction, free cash flow conversion, and really what I see is maybe a little bit less of the CapEx spend at this point. In fact, they're going to be benefiting from other people's CapEx spend, right? These AI hyperscalers, all these companies are going to be like, listen here, we need this data, we got to pay you. So they are on the right side of that equation. No question about it. This is a high PE stock. So there's no question there are some risks here. I don't think they're tiny risks, but at the same time, I think the company's doing things to head in the right direction to make these risks much smaller. So there's always this possibility that as people move more towards AI to get answers to questions, they're not going to be going directly to Reddit. So it remains to be seen how that ad revenue sort of gets affected by that. They're counteracting that with these tools that are going to make that ad revenue a little bit stickier. But those people who just maybe went to Reddit to get an answer aren't necessarily the kind of people, the super high quality that are going to create content, that are going to join the community and really be contributors to what's going on there. And as the CEO of Reddit says, you come to Reddit for real opinions and real people, right? That's the real part of the equation, is really that very monetizable thing right now. So there's no question, there's this possibility that as we move forward, we start to see a little bit of erosion in some areas of the business if everyone goes to AI. That would be a real shame, because then we're just moving towards, a kind of system where we enter into that circular pattern of there's less real data and it just becomes recycled data over and over again. But I don't think that's going to happen. I think it's going to be one of the few very valuable community, real-time updated community, right? This isn't data from 10 years ago that we're going to use and try to make the most of. This is constantly updating community value of the highest caliber. Okay, let's take a look at some technicals here. So we've got just broader market. We've got the VIX kind of popping up a little bit, which is interesting. We're sort of seeing something that we call spot up, vol up. So we've seen the market kind of keep pushing to highs. Outside of this sort of last couple days, some small down days going sideways, mostly on the SPY. And I'll show you some insight on this particular area that you should know. So a little bit of VIX up, just kind of getting a little bit nervous about valuations. And I've seen a lot of that systemic sort of flow has really started to peter out a little bit. So the things that I've been talking about on my shows for probably 5 or 6 weeks, just saying, listen, the pain point is up, because nobody is in this market. Well, a lot of people have come into this market. The retail was in, they were the smart money, and then the sort of the institutional, the hedge funds have really piled in over the last few weeks. So from a flows perspective, we're kind of, back to the point where the market's got to really stand on its own 2 feet, so to speak, right? VIX futures, we can see still in a very happy shape, right? There's no question an upward sloping contango. VIX still above 20, so that's something to consider from a broad market perspective. Here's Reddit. We've broken out past this, so I think this bodes really well. I'd like to see some other indicators starting to kind of curl back up again. It takes a little bit of time when you've had a difficult lower consolidation like this, as opposed to a higher consolidation that can explode higher. Right now, though, looking very good. As long as it stays above that sort of 128 level, I think you could kind of expect this thing to probably settle and keep going, given that the news was very good, and this stock is nowhere near its all-time highs. So that's a positive there. Let's take a look. This is the chart I'm really interested in. I've been watching this for weeks. I mentioned it on my shows probably when we were breaking out right around here. And I said, listen, we're coming out of this consolidation of the relationship between ARK and XLK. So think of ARK as the kind of silly money, the speculative money, the, let's go for it and YOLO type money, but a real belief in AI. I think there's some underlying truth there. It's not just crazy. It's underlying truth that we're heading into a very interesting and I think very potentially profitable phase for companies of all kinds, as we have this fever developing in this phase of AI, this inference phase, insight phase. So I said, listen, as long as this stays above this sort of traffic jam down here, it's probably looking pretty good, and I would target this level. That's exactly where we got to. So this relationship shows ARK versus the big caps, right? So a little bit of fun money versus the big caps, although there's Tesla in there, there's some larger names, but generally speaking, if this thing's heading down, it means people are coming out of the silly money and potentially going into the big cap, strong balance sheet heroes, as I like to call them. And when it's going up, it means that the silly money is starting to perform a little better. What we've seen lately is a breakout in the silly money. I think it needs to get through these 4 tops now in order to see that next phase. I feel very good about it continuing at some point, but given the overall market backdrop that I just described, maybe we're heading towards a little bit of a consolidation type phase in broader markets. If you look at the S&P, it's kind of sort of broken below just a bit of a sort of an upward sloping trend line, quite a long one, and it's kind of going sideways. I don't see a big sell-off, but at the same time, I don't see just a massive explosion in the broader market. AI is driving the bus to some extent, so we may see this lead the broader market at some point, and I think that's going to be a very good sign if that happens. Here, this basically confirming what I just talked about. Here's ARK itself. So here's your Cathie Wood winning again, coming back up here. This is where we picked up some leaps in the hedged AI portfolio, the AI version, picked up right here. Let me take a look. Here we can see this is the ARK position up 36%, almost 37%. We've got other ones 43, 31%, 20%. And a couple that are pretty close to even, up 6, down 6, a little bit like that, right? So this position doing very, very well. Let's take a look at our skew here. So we've got skew basically describes sort of out of the money calls and puts, the at the monies. I am seeing a little bit of excitement in the market from a short-term perspective for some upside, right? So now these are way out of the money, so I wouldn't put too much into this, too much faith into this curve here. But what I do like is when I look at some of these longer-term options, the skew is very, very flat, even inverted to the upside. So to me, the market is not really pricing in a kind of explosion to the upside. The option pricing is not in the basement, I would say, in those duration of options. We'll take a look at that right now. Okay, so we can see the term structure. So pretty nice, actually, favorable for some of these longer term trades here. Reasonable. We don't always see that, so that's kind of a nice thing. And we can see the general option pricing shorter term is pretty low. I'd say there's nothing really to see there. A lot of things are quite low at this point in the cycle. Now I would get in here and I'd be looking at maybe potentially looking at perhaps a 40 delta. Depends how you want to position this. A 40 delta is going to get you up pretty high in strike. That would be more like a kind of explosive sort of leap potential. Not bad pricing. I mean, it's been lower for sure. So I'd say overall there is the potential for maybe a little bit more Vega risk here, right? You don't see kind of 10 points of Vega risk. We could get back down in here if things get really, really quiet. Remember, we're focusing on delta here. This isn't about sort of, a small move. We're expecting a big move. So delta is more important than that Greek Vega. It's going to describe a little of that risk, but really in the grand scheme of things, it's not a massive, massive risk. So I'd say the pricing's okay. It's not like a 10 out of 10. It's probably like a sort of 7 out of 10. And so I think that's still fine for our purposes. So if we look at pricing, I'd be sort of focusing on something like a September 2026. It's kind of what I like, kind of a minimum 12 months. You can go up to 2 years, but 12 to 18 is kind of that sweet spot for me, where you're not getting too crazy with the time value embedded in there. And so I'd be looking at probably a 110. If you want to do a little bit more of a sort of stock replacement type strategy, I think that's going to do pretty well. It doesn't price as well as some things I've seen out there, like Amazon prices really, really well. And that depends on a few different things, on skew, on pricing overall. But Reddit tends to be a little bit of a higher implied volatility type of stock. So, and if you want to go Leaps Explosion, which we'll probably look at this week, potentially in a few different names, but I really want to see if this market looks like it wants to spin its wheels a little bit, then I may be a little bit more hesitant to get into some of those kinds of trades. But you'd be looking at probably around maybe the 190, something like that. So for about $32 on a one lot, $3,000, $3,200, you get sort of that nice explosive potential up there. And if you think like I do, I think Reddit could go 250, 300 potentially over time as the fever catches on in this area, and they become one of those very coveted names. So I think that's something where, if it happens in the next 6 or 7 months, you could turn that, into maybe a triple, quadruple quite easily. And if it doesn't happen, you could sort of give yourself maybe a 121, 120 stop to get out of that position. Now, for me, a lot of these positions are, I believe in it. I believe in the story. I don't get involved in something that I don't truly believe in. This, I wouldn't say is as strong as, say, like an Amazon, maybe a Palantir, maybe some of the energy plays out there that I like to look at in the program. But I think it's a very, very strong, decent bet for the space as a very unique property in an area that's really going to sort of flourish from this inference explosion. So hopefully you guys enjoyed that, and we'll see you in the next video.